Hello everyone, hope everyone is doing well. So here is a review of previous week price action. Excuse my voice, I have gotten a bit of a flu previous week. So let's get into it. So last week we had FOMC on Wednesday. And the protocol is whenever we have FOMC, usually it's best to avoid the first 2 days because that's where the traps are being set up. And it's good to look for trade after the FOMC hits the market. The protocol is to look after 15-20 minutes, 15 to 30 minutes after 2 p.m. New York time, and then we expect to see like an opposite move of whatever 2 p.m. up to 15 to 20 minutes afterwards. It will be the opposite move. And I have shared a review about that on Wednesday. And then the other 2 days are also more preferable to trade. So especially Thursday. So it's better to avoid trading the first half of the week than wait for the FOMC to hit and then trade the next days. And we'll do a review about the price action on the previous week. So let's get into it. So if we see, this was the previous week range. And then we had a very obvious swing high on the previous week over here. And we see how that gets tapped into Thursday. So Monday is an inside day. Price goes as far down as the daily week consequent encroachment, even a bit below it. Then it opens this volume imbalance, and then it comes down into this daily busy. And then Wednesday we had like a huge move. So price came down first, and then it went below the daily busy. And notice also how it went below the 0.5 of the range. Here price behaved like a slingshot, so like it came all the way down, it got a lot of strength, it was in a discount, and our objective was higher. We had this daily swing high, and then from here, boom, it goes up and delivers all the way up to Thursday. We're gonna see on the lower time frame what this level is, like high of the week. And then Friday was the inside day. It was banging around this daily CB and this daily volume imbalance. If we look on the lower time frame, so here we see how our price has opened on Sunday. We came down into Tuesday, into the daily BC that we were looking before. And then Wednesday, we came below the 0.5 range. And then we had this big move up. Thursday, we continued the move up. Came down at 10 a.m. to find some support at the order block. And then it went for the high of the week. And this was the high of the week. You see here this blue line, which is the 0.5 consequent encroachment of this week from 26 March, 10 a.m. So, and then we are also inside of a bearish breaker. So high, low, higher, high. And then price just consolidates around, and then we get another move Friday into the range. It almost touches the weak consequent encroachment, and then notice how it closes at the low of the 4-hour CB. This one. If we look on the 1 hour, so here we have opened, and this was for me like the trade of the week. How we went just below the 0.5 at the FOMC, the 0.5 range of the previous week, and then we had this explosive move up. Very nice trade. And then on Thursday, I didn't participate because I was sick, but I backtest this very nice setup. So notice how over here price opens. We are, if I switch to the daily here, we are at the daily order block mean threshold. So it would be this one. So notice this level, this is the mean threshold. If we put it on the bodies, it finds support and then it moves higher, it forms this BC. And notice how this BC forms at the 0.75 range of the previous week over here. And then it goes higher, we come all the way up during London, but we failed to take the previous week high, which was our objective for the week. So now we can anticipate that New York is going to be a retracement, and then from New York retracement is going to go and get the objective for the week. We also have President Trump talking at 10 a.m. and that's when the move happens. So notice how this is also the optimal trade entry. So if we put our fib between the bodies, we should see the 62% retracement level. And it's perfectly hit over here. So it touches the 62% retracement level, and we are also at the 75% of the previous week range. We are also at the daily week consequent encroachment. I'm going to show it here. And we are also at the daily week consequent encroachment. So we see this one over here. 1st of May. And then the next candle at 11. It opens, it goes down to the BC consequent encroachment. Mean threshold. And then boom, it goes up. And it takes our objective, the previous week high, which is also the swing high on the daily. And then it goes a little bit higher than that of the 4-hour bearish breaker with the consequent encroachment. It doesn't touch the new week opening gap. So sometimes you might expect that it will touch this one. It didn't touch it in this case, and this showed it was bearish. Notice how it stopped below it. Here, if you look on the lower time frames, you will also notice SMT divergence. And this also happens at around 3:30 p.m. when we expect an opposite move to come. So since it's been going up, and then we get the down move at 3:30 into 4 o'clock. Then on Friday, price comes to this 1 hour week to the lower quadrant. We're also inside the 1 hour order block. It goes higher, quite of a high resistance move, but it's Friday, so it's better if you make money so far to not trade on Fridays. Before that, I just want to mention that this is the TGIF, so thanks God it's Friday. This is a move that we expect to happen after lunch on Thursday. Otherwise, if it doesn't offer it on Thursday, we expect it to happen on Friday to come to the 20% of the weekly range. So notice how it offers it here, like 20 to 30%. So it offers it over here. So from the high to 20 to 30%. So back to Friday. So price goes again up one more time above the previous week high. And then it comes lower. and then we get a nice little trade over here into this CB around 3 p.m. So yeah, so this was the review for the previous week. So very nice trade on Wednesday over here, and then on Thursday over here. So we tackle all this PD arrays, very clean setup. So hope you enjoy this one.